the deep dive. You know how it goes. Information overload is really the enemy of insight. So today we're going to cut through some of that noise. We're doing a targeted analysis of a specific, pretty high-stakes market intelligence briefing that landed just a few days ago.
That's right. We are deep diving into the Harrison Digital Market Intelligence December 2025 crypto briefing. And what we have here is a detailed snapshot dated December 21, 2025. It captures three absolutely pivotal areas.
Okay, what are the...
First, major shifts in U.S. regulatory policy. Second, a significant political leadership change. And third, and this is critical, some urgent on-chain market signals you really can't afford to miss.
Right, so our mission is crystal clear. We're extracting the 5 major actionable takeaways from this source material. We want you to walk away from this deep dive, not just knowing the news, but, understanding what it all means when you put it together.
What's driving sentiment and systemic risk in the crypto space as we head into 2026? So we'll start with the legal and policy front. You've got tax clarity and some escalating lawsuits. Then we'll tackle that political void opening up on Capitol Hill. And finally, we'll zoom right in on the specific market warnings and Bitcoin's, its immediate struggle at resistance.
Okay, let's unpack this. We'll begin with the legislative front and a surprisingly positive development on taxes, which, let's be honest, is usually the most painful part of dealing with digital assets.
Right. Harrison Digital is highlighting a significant bipartisan push toward clarity, and it's mainly focused on stablecoins.
This feels like a crucial first step for, mainstream adoption.
It is. What's fascinating here is that lawmakers are finally acknowledging that if crypto is going to function as a true medium of exchange, the regulatory friction just has to be minimized. So this proposal, it aims to create a clear, new U.S. tax framework moving beyond the old definitions.
And the material highlights 2 specific benefits that directly affect the daily user. That's what we really care about. First, an exemption for stablecoin transactions under $200 from being taxed.
That benefit is massive. I mean, just think about it. Every time you spend a digital asset, technically that used to be a taxable event.
A complete accounting nightmare if you're just buying a coffee.
Exactly. Or paying for microtransactions. By exempting transactions under $200, they're essentially allowing stablecoins to function as a digital dollar without that constant fear of triggering capital gains reporting. It just clears the path for daily spending.
And the second benefit, it's just as important for the long-term investors and the developers. The proposal allows for a 5-year deferral on taxes for staking rewards. That feels like a game changer.
It is. It really is, because it finally addresses the core issue of, realization. A lot of people who stake assets get rewards that are immediately treated as income, even if they don't sell those tokens for years.
Right.
So by allowing a 5-year deferral, the government is kind of acknowledging that staking rewards are often held just to secure the network.
Right.
And they shouldn't be taxed until that asset is actually sold or, realized for a profit. It's a huge nod to network participation.
Okay, so we have 2 clear, substantial benefits, all aimed at reducing friction. That's the regulatory carrot. But there's always a stick, right? And the Harrison Digital Briefing makes sure we see the fine print in this same proposal.
That's the counterpoint, and we can't ignore it. The exact same proposed framework seeks to apply the wash sale rules.
For those who might not trade that often, can you give us a quick reminder of what that means in practice? Why is that rule so critical for active traders?
Sure. The wash sale rule is designed to prevent tax manipulation. It stops investors from claiming a tax loss, what people call loss harvesting, if they repurchase a substantially identical asset within 30 days.
Standard in traditional markets.
It is. But in crypto, where assets are so volatile and traders are quick to sell and rebuy, this has been an absolutely critical tool for managing tax liabilities.
So if this passes, the government is essentially saying, we'll make your stablecoin spending easier, but we are taking away your favorite loss harvesting strategy. It's a classic trade-off.
Precisely. It gives clarity to one group while removing a key financial planning tool for another. It just increases the complexity and cost of active trading.
And that legislative friction immediately flows into the judicial realm. Let's transition now to regulatory conflict, because Coinbase is not waiting around for Congress. They're moving aggressively into the courts.
And this is a major development. It really speaks to the existential battle over jurisdiction. The briefing details that Coinbase is suing state regulators in Connecticut, Illinois, and Michigan over prediction markets.
And the core reason for the lawsuits is that these states are trying to block these markets, Polymarket and platforms like it, by classifying them explicitly as illegal gambling.
That classification is the key point of conflict.
Hmm.
Prediction markets, which allow users to bet on outcomes from economic indicators to political events, they argue they are not games of chance. They see themselves as vital mechanisms for risk assessment and information aggregation, even as new financial instruments.
So what is Coinbase actually demanding in court, and why does that matter for everyone, everywhere in the country?
Coinbase is seeking judicial recognition of federal jurisdiction, specifically that of the Commodity Futures Trading Commission, or CFTC, over these products. And that designation, it fundamentally changes the nature of the asset.
How so?
If the CFTC has jurisdiction, prediction markets are regulated as financial commodities. If the states win, they are regulated as gambling, which often means they're banned outright or, subject to really strict state-level casino laws.
That's a fundamental difference. One implies legitimacy and innovation. The other implies, syntax and prohibition.
Exactly. So this lawsuit, it's not just about 3 states. It's about defining the national regulatory landscape for all novel financial products moving forward. It sets a critical precedent.
Okay, that covers the regulatory side. Let's move from the courts to Capitol Hill. This is where Harrison Digital identifies a looming crisis, a significant political leadership void that's about to open up.
The focus here is on Senator Cynthia Lummis, the Republican from Wyoming. And the briefing confirms the surprising announcement. She will not seek re-election for another term in 2026.
She cited exhaustion after years of service, which is understandable, but the market reaction tells me this is far more than just a typical retirement.
Oh, it is. The briefing explicitly identifies her as Bitcoin's greatest ally in the U.S. Senate. Her departure leaves a truly significant pro-crypto leadership vacuum. You have to understand, she wasn't just a friendly vote. She was a legislative architect.
Isn't that a little overdramatic? I mean, surely in a chamber of 100 senators, the industry can find a new champion, right? What makes her specifically irreplaceable?
Well, what made Lummis so unique was her combination of political power and deep technical comprehension. She wasn't just reading talking points. She owned Bitcoin. She understood proof of work versus proof of stake, and she had the seniority to get complex legislation drafted and actually debated.
The Lummis-Gillibrand bill.
The Lummis-Gillibrand bill, a massive effort to create a comprehensive framework. Losing her makes, losing institutional memory, and a tireless, high-profile voice willing to push back against restrictive regulatory momentum.
So, for you listening at home, this isn't just a political footnote. Her absence significantly increases the difficulty of passing favorable legislation, or, critically, stopping unfavorable legislation from advancing.
That's the challenge. Legislative efforts just stall without champions. The industry now faces the urgent task of finding and cultivating new, equally dedicated voices, and that takes time that, well, the markets might not have.
And that massive political uncertainty lands at the exact same time the markets themselves are flashing some serious warning signs. This brings us to segment 3, the heart of the market analysis, where the briefing includes an official alert from CryptoQuant.
This is the urgent part of the report. CryptoQuant, they're known for their sophisticated on-chain analysis, and they are sounding the alarm. They're warning that key indicators signal the official start of a systemic bearish phase. This isn't just a seasonal pullback.
And what mechanism are they pointing to as the primary driver?
It's macroeconomic liquidity, or, more accurately, the severe lack of it. When central banks tighten monetary policy and global cash flow dries up, risky assets like Bitcoin are disproportionately affected. CryptoQuant sees systemic flows indicating that investors are consolidating, they're pulling risk off the table because the macro environment just isn't supportive right now.
Wait, let's pause on that risk because the briefing is extremely specific here. They warn of a distinct risk of Bitcoin dropping towards the $70,000 zone if key support levels aren't recovered. That's a very serious market signal.
It is. And it's likely driven by long-term holder behavior metrics. When you see specific downside targets like $70,000, it usually correlates with analyzing the realized price of large investor cohorts, basically the average price at which long-term holders acquired their coins.
Okay, so what does that mean?
It means if the price falls to $70,000, it puts immense stress on a huge swath of the market. It could lead to widespread capitulation, and that could trigger a much deeper sell-off. It's a very calculated alert based on measuring investor pain points.
That context makes that number far more serious than just an arbitrary price level. So how is the market reacting to this right now? Let's look at the price action in the briefing.
The immediate market action really confirms the struggle. Bitcoin is currently struggling, mightily, at the $89,000 resistance level. It's acting like a heavy ceiling.
And the analysis details that BTC is facing strong, persistent selling pressure, specifically during U.S. trading hours.
That U.S. hour selling pressure is key and suggests institutional large-scale players are executing sell orders during peak liquidity. This isn't just retail volatility. Bitcoin has repeatedly failed to consolidate above 89,000, and every failure just reinforces that cautious, even bearish sentiment.
So what are the immediate technical markers that analysts are watching now?
Right now, analysts are clearly identifying $84,000 as the critical support level. If Bitcoin breaks decisively below that, well, the bearish outlook solidifies. It would confirm the CryptoQuant warning and make that $70,000 risk target much more plausible.
And on the upside,
An upside breakout would target 94,000, but the current trend is one of caution and testing support. The key takeaway for you listening is that the path of least resistance right now seems to be downward until that macro liquidity picture changes.
this entire intelligence briefing, it really paints a picture of a sector facing simultaneous headwinds: legislative, political, and systemic market headwinds. Which naturally brings us to the final, and I'd say crucial component of the briefing: security.
Absolutely. The briefing includes a sharp security notice, and this is one area where we need to be really blunt. Protecting your assets is always priority number one.
Okay, so Harrison Digital explicitly states they will never contact you first via direct message, a DM to offer investment advice, ask for money, private keys, or invite you to some dubious VIP group. If you get a message from anyone claiming to be affiliated with them and asking for crypto or sensitive info, it is a 100% guaranteed scam.
The core safety message is simple and unwavering. Trust no one who DMs you money advice. Scammers love to impersonate trusted sources, especially during periods of high market uncertainty. Always verify. Only use official channels. And treat any unsolicited contact as a threat.
So what does this all mean, putting these 5 pieces together from the briefing? We see the government offering tax clarity on stablecoins, great for adoption, but at the same time applying restrictive watch sale rules. We have a legal war escalating over whether digital products are financial commodities or, illegal gambling.
And most significantly, we see the political landscape about to lose one of its most powerful advocates, all while the market battles these bearish on-chain signals that project a potential drop toward that challenging $70,000 zone. 2026 is shaping up to be a year defined by contrasts and critical tipping points. We have the technical potential for smoother transactions because of tax reform versus the reality of a looming political vacuum on Capitol Hill with this intense market pressure driving sentiment. The industry is effectively facing a test of resilience on 3 separate fronts simultaneously.
It demands attention and careful navigation. It really is a complex picture.
It does. So let's leave you with one final provocative thought to mull over. Considering that specific $70,000 downside risk from CryptoQuant and the serious political vacuum left by Senator Lummis's retirement, which force dominates the narrative next year, does the market find new legislative champions quickly enough to sustain policy momentum and provide some fundamental certainty? Or does the enduring lack of macroeconomic liquidity just dominate the price action, validating that bearish warning?
That is the critical question facing the market right now. Thank you for joining us for this deep dive into the Harrison Digital Market Intelligence Briefing. We hope this knowledge helps you chart a course through the turbulent waters ahead. Keep diving deep into the knowledge that matters most to you.